What's going on with you guys? This is the trade that I took AM session. It's 7:20 macro on Thursday. This is one of the A+ trades. The only thing bad about it was we were seeing the new week open the gap. But other than that, I think this was an A+ trade, and I'm going to break down the market structure ideal that I was looking at that I thought this made it look clean. So let's go jump into it. On the 15-minute, you can literally see that we are in a downtrend. So we went up, down, and we'll continue to go down. So my brain was thinking when we got into this area right here, we came back up. I'm thinking that there's no way I'm taking a buy. So I was like 90% bias of a bearish, and then 10% bullish, which it makes it be an A+ just because of that. So again, for me personally, inside my A+ trade, or me feel like it's A+ trade or good trade, very well good trade, it has to have a 90-10 bias. If it's 50-50 or 60-40, it's very unlikely for that to be an A+ trade for me. At max is B+. Does not matter of the market structure, because if it's the bias of the higher time frame is almost 60-40, the market structure can still be an SMT somewhere, right, or something like that. So I don't hold structure to that. I just want to make sure that I know high time frame that I feel very confident, and then I want to pair that with a lower time frame. And this is what we're going to talk about. So 15-minute, I told you I'm very bearish. We keep on making low lows, and I'm literally watching this to make what? Another low. So looking at this, coming it down, waiting for it, not taking any of this, again. Remember, I am bullish. I'm bearish. So I'm not taking any of these bullish moves. I'm waiting for us to come up, and I think you see it much better on the 1 minute. Once we come up at 6:32, yep, 6:32 a.m., we literally take these highs out right here, and I'm just looking like, okay, what do we do next? We then displace through here. This down close, up close candle right here. This could have been break, we could bounce off here and up here. You can see we didn't. We literally take that and clear that out. I can take this new week open gap out because I think we know that we're seeing inside new week open gap. So we literally close this gap right here, or excuse me, we literally market structure down right here. Now when we market structure down right there, I'm literally looking at the next thing my eyes is going to is next thing I'm looking for a swing high. So in my brain, real time, I was seeing this as a market making sell model, and I had liquidity right here. This is my target. I remember I told you I love taking internal liquidity, right? I don't like going for external. I like to go for internal liquidity. This has been A+. You can leave runs to this, that's sure, but I like going for this right here, internal liquidity, just in case we want to SMT it and shoot back up. So for me, this was like good right here. We make market shift lower right here, and this is the new part. This is where this will help you a lot. If we're looking for a lower move, and we already have this market structure shift, do not sell. Me personally, I'm not selling any right here, hoping for this to be a breakaway gap. Sometimes you can do that. There's nothing wrong with that. But majority of times, unless we're just flying lower, it's safe to say that you can always bet that we're gonna come back up to this gap. And more specifically, what's really gonna help you, I'm going down to 1 minute. What's really gonna help you is once we come down lower, wait for a swing high to be put in, and then wait for that to be manipulated. So we don't put a swing high right here. We go lower. We don't put a swing high. We don't barely, but I wouldn't claim this as a swing high. This is a swing high because we literally tap into this 15-minute. This 1 minute fair value gap, but also we are at a prominent high where we just took out some traders. So this took out some traders right here, and then we go lower. Once that's the first, I'm gonna say it again, that's the first high, like the first official high that we've had from this run. So I'm looking at this run. What's the first initial high that we had? Boom, this is the first high. If that's the first high, you want to wait. Me personally, you want to wait for that to be taken. So we put in a high, and you want to wait for that to be taken, and we sweep that liquidity. What that would do is do two things. A, tell you that you're really on the side because we swept liquidity. Two, we stopped at 1 people, so we should be on the side again. And 3, that is literally the start of a sell cycle within a lower time frame. Because if this is a high, and then we take this high out and go back lower, we just formed another market making sell model on a lower time frame. I'm not gonna do it, but if I was going to the 15-second, this is absolutely a market making sell model within this model. There's no reason to do all that because you can stay out on the 1 minute. But my point being said, this starts a market making sell model going to the draw liquidity that we are on the 15 minute, on the 5 minute, on the 1 hour, right? We already bearish. So you're just aligning all these time frames together to get you a good entry, or ideally a good price, a good reading price. We put in a high, take out those highs right there, manipulate those people. I can really put X right there if it helps people. Stop those people out. We stop those people out. Then what do? We start market shifting back down. Now this is a good order block in my opinion, because this is your, when you think about it, this is your breaker. It has to be. This has to be a breaker. So I'm just gonna do the order block. There we go. This has, you can't even see it. This has to be your breaker. Coming down lower, respect the breaker. I'm getting in right here. Now I got a breaker. We got a stop out, and I got this little. You got this little ray right here. You can say that's a little stop out right there, right? How that we put in the high. Now what this can do? This wick run right above there, right? Just 10 seconds right above it. And again, on the lower time frame, we go to the 5 second. This is a market maker sell model. So all these wicks and stuff like that's very important. You're looking at them. So reading price or block right there, getting some interest right there, or sales right there. Wanted to put some more on there, but I just didn't. I should put some more on there, but it's all good. Not going to dread it. It's cool. I'm fine with it. And then like I said, we came down lower, expected that order block, and then ultimately hit TP right there. So that's the trade you kind of see. But I think the biggest thing, the biggest takeaway is waiting for that market maker sell model, and then or looking in the context of we putting a high, and then that high needs to be swept before you take any trades. So basically what I'm saying is don't do this. This is risky as can be. Doing something like that is super risky because we have not swept anything internal. So we could absolutely sweep some internal. So then you could do this. The problem with this, because you can do that, right? We sweep internal, but with this high should never be taken. My opinion, this is too much risk, right? So unless you just, bought this, sold this fair value gap and then literally do this, you can't do that. There's nothing wrong with that. I just literally like doing this. Only difference is it's the same trade. You see what I'm saying? Like it's nothing really that much different. I think it's something like that. It's exactly the same trade. Like maybe you got your entry right here and you have to risk more, and then I risk a little bit less, but I got my entry down here. So it's just again to whoever fits your own. If you want to get in at this gap or the way that I trade, the only thing that if you do get in this gap is you gotta understand that you will still need to be waiting and giving some breathing room to allow it to make this manipulation. Because the majority of times the market maker, the market is going to make that manipulation before it make the move. So just make sure you give a stop loss breathing room. But that is why it's an A+ for me. We 90% to 10% bias. We was bearish because I was going for 90%. We also make a market make a sell model right here. That'd be the high right there, and then market structure down. Then we also have the internal liquidity, which again is another market making sell model when you think about it, up in here, being the predominantly high right there. Then we're going back down, market structure down, getting in, all that good stuff, and then literally that'll be it right there. So I really hope this video helped. I really hope you understand the idea of waiting for that internal liquidity and why it can be a game changer. You wait for that internal liquidity to be taken, and then just lining that with a higher time frame. I was bearish on high time frame, so I waited for that bearish movement and for us to have all that into line to make us have confidence at least to take the trade. So as I say in every single video, I don't want to make this video too long, but I want to end it right there, and I'm gonna see you on the next one.